any ETF that's based on spot that gets approved, my guess is you see 10% upside immediately.
Okay.
Like within minutes, you'll see Bitcoin up because everyone's going to rush into it and shorts are honestly going to freak out and cover. The question is it a long-term catalyst? And I think longer term it is, because it does kind of give the additional validity to Bitcoin as an investment for a lot of Main Street. And still, we're still looking at older generations, baby boomers, who really aren't invested at all in Bitcoin overall. So I think there's a lot of money there. We know that's a huge amount of income or savings that could potentially come in. And so I think longer term, any sort of approval is a nod from the SEC that this is a valid investment. And we've heard BlackRock CEO say that at this point. I mean, he's full all in on Bitcoin at least.
Renowned technical analyst Gareth Soloway, known for his bearish stance on Bitcoin since late 2021, is showing signs of a shifting perspective. While other experts projected a cryptocurrency peak, Soloway predicted a steep decline below $20,000, a prediction he has upheld for 20 months. However, he now leans towards a bullish outlook, attributing this change to the potential approval of a spot Bitcoin exchange-traded fund by the SEC. Soloway anticipates this event to trigger a rapid 10% surge in Bitcoin's value and attract significant institutional investment. In a recent interview, Soloway discussed the cryptocurrency market's recent stability. He interpreted this as traders and speculators awaiting SEC approval for ETF applications, echoing the sentiments of analyst Dylan Leclerc. Leclerc's tweet highlighted low trading volumes and a market seemingly on hold until ETF approval. Soloway agrees with this view, emphasizing that a spot Bitcoin ETF introduction could drive substantial inflows from baby boomers, pension funds, and institutions. Despite the potential for a bullish turn, Soloway cautions that a major hurdle remains before a full-fledged bull market can materialize. As the crypto community eagerly awaits regulatory decisions, Soloway's evolving perspective adds intrigue to Bitcoin's future trajectory.
The lack of volatility in Bitcoin has actually been astounding. I mean, when was the last time you and I sat here and said the stock market's way more volatile than cryptocurrency? And that's where we are at this point. So I do think that that's the case at this point, is that everyone is now waiting on this. And also I think we have to look at what happens. And this is my kind of negative for Bitcoin specifically, is that I think the regulatory stuff is behind Bitcoin. It's going to be slowly more and more accepted by the big players out there, the institutions, and really people in general. But my only concern for Bitcoin is if the stock market were to hit a major bump. And if we saw, let's say a drawdown on the NASDAQ back to October lows, if we look at the NASDAQ, in fact, I'm going to show my screen here because I think this is a really important point. I'm going to split up my screen and let's look at this, right? So here we have Bitcoin on one side and the NASDAQ on the other. If we go to the daily charts here, daily charts across the board, what we see if we zoom out on Bitcoin is that we only have retraced at this point a minor amount, right? So if we just do a Fibonacci retrace on Bitcoin to the lows, we've retraced about 25% of the down move. If we go to the NASDAQ, on the other hand, what's remarkable here is we've retraced over 80% from, at least at the highs. We've come back down just a little bit. But my concern is that if this is the best you get on Bitcoin with a huge rally in the NASDAQ, if the NASDAQ just trades back here, where does Bitcoin go? Does it end up going back to these lows of 15.7 or potentially lower? That honestly is my only negative case for Bitcoin. Aside from that, I honestly think Bitcoin is golden. I think it longer term, if your horizon is more than a year or two, I think it's a great investment.
What are the catalysts that would cause the stock market to retrace to where it would have an influence on Bitcoin? Is there anything specific you're watching for?
Yeah, I mean, I think lately we've seen some little signs of that. For instance, Fitch's downgrade of U.S. credit, Moody's downgrading a bunch of banks and threatening the big banks with a downgrade. So I think a credit event would be one of those major potential scenarios that could freak things out. Weirdly enough, that actually could be a positive for Bitcoin. The negative for the stock market that I think would be negative for cryptocurrency and specifically Bitcoin would be more if we hit a recession with inflation still elevated. And if the stock market valuations come in significantly because of a recession and it's not a credit event at that point, I do think money would also kind of be pulled away from Bitcoin just because of the fear factor, the deleveraging going on in the system. So that's really the negative case for Bitcoin. Aside from that, again, it remains very rosy. There's two separate economies. There's no doubt about it. You have people that are struggling because of inflation, and then you have other people that are invested, and therefore they're doing fine because even though inflation's gone up, their portfolios have gone up 30, 40% in this rally from last October. The other thing to kind of keep in mind too, and this is the one that bothers me the most, is, you're now at a point where the U.S. is now paying about $1 trillion of interest every single year. You have credit card debt at $1 trillion. You have the average car payment is something like $700 and change. So there are these things that are just sucking the lifeblood out of the economy. And for me, interest payments are the worst because you're not really getting anything from it, right? It's just, you're basically giving money away consistently. Where that money, $1 trillion, if it was put instead of towards interest, but put into the economy, would be massively stimulative to the overall economy. You could literally support tons of people with that type of money.
Discussing the current state of the U.S. economy in greater detail, Soloway underscores that the economy's challenges persist despite the modestly favorable consumer price index data released. The Labor Department's recent report on the CPI for July indicated a 0.2% gain, contributing to an annualized rate of 3.2%, up from 3% in June. While this performance slightly surpasses economists' prior projection of a 3.3% annualized increase, Soloway emphasizes that the situation remains uncertain. The reaction to the report initially led to a rise in global shares and the dollar, but the enthusiasm waned in the following hours. According to Soloway, the subsequent decline was a result of the market comprehending that the Federal Reserve is still distant from implementing rate cuts or a significant policy pivot. This realization led to the diminished excitement observed. In the interview, Soloway elaborates further on these dynamics, providing additional insights into the evolving economic landscape.
I think initially the markets were relieved, right? It was ever so slightly better than expected, yet still higher than last month, right? We did see an uptick from last month's 3%. So for me, I thought that the initial rally was what maybe could have been short covering, maybe some short covering running there, some people just jumping in saying, okay, it's better than expected. But what's interesting here is that we've actually seen the stock market roll over. In fact, if I share my screen here, you guys can check this out. So this was the initial open on the S&P 500, and we had this really big surge up. But look at what's happened since. We're essentially back to the unchanged mark. So the question here is are people saying, wait a minute, we were slightly better than expected, but at the same time, we're still a little bit more elevated, which, by the way, anything above 3% is going to make it very hard for the Fed to justify cutting rates at the slightest hiccup in the economy. He has choreographed that, right? He has told us higher for longer. It's been the market that has kind of said, nope, we don't believe him. Let's keep rallying on risk assets. But I think we're starting to kind of recognize that. We see some of the Magnificent Seven tech stocks starting to crumble. Apple, Microsoft down. Even NVIDIA over the last couple of days has taken a pretty big hit as that valuation is just so ridiculous. So I think for Jerome Powell, he's going to likely continue to stay hawkish because he doesn't probably want the stock market as high as it is. But I think, honestly, I'm in the camp that the Fed is done hiking. And I'm in the camp for that reason, because even though jobs have remained good, the underlying is not great, meaning that if you look at part-time work, there's been a big explosion in jobs in part-time, but full-time is actually starting to weaken. And in the latest jobs report, what we actually saw was government jobs. That was a big gainer, but a lot of the private sector saw some reduction. So the underlying numbers in the jobs report are starting to weaken. And by the way, last thing I'll say too is consumer confidence has been another factor that the bulls have kind of hung their hat on, saying, oh, it's so good, consumer confidence. But if you break down consumer confidence to income, the higher incomes, it's been soaring, which makes sense because the stock market's soaring. The lower income is actually plummeting the consumer confidence. And that's, again, these underlying numbers that really mainstream media doesn't delve into, but people should understand. I think the big thing is going to be the jobs reports going forward. So if you see a significant weakening in jobs reports, it's going to basically, guarantee that the Fed is not going to continue to hike. And one of the things that Jerome Powell said in the last press conference was that he was very much under the understanding that the delay in hikes is significant, meaning 6 to 12 months from when they hike rates till it actually hits the economy. So to me, that was a signal that the Fed is likely on the sidelines here. Now, it doesn't mean the Fed's going to cut. I think the Fed cutting is well into next year, but I do think that at least the Fed is signaling that they're understanding that the underlying data is weakening, and they're going to sit back and let these rate hikes take effect before they reevaluate.
Another dataset that has captured Soloway's attention is the Producer Price Index, which recently exceeded expectations. Reports from the Bureau of Labor Statistics indicate that the index, tracking average price changes businesses paid to suppliers, rose annually by 0.8%, surpassing the anticipated 0.7% increase. Soloway notes in a recent tweet that this might signal persisting inflationary pressures, emphasizing that producer prices tend to influence consumer prices. He suggests that this reinforces his view of prolonged elevated interest rates due to sticky inflation hovering around 3%. While sticky inflation poses significant challenges to the economy, larger hurdles loom on the horizon. Summarizing this complex situation, Leclerc characterizes it as a substantial storm. The Congressional Budget Office's projections, based on optimistic inflation and interest rate estimates, anticipate increasing deficits as a percentage of GDP every year throughout the decade. Concurrently, the debt-to-GDP ratio is projected to reach 200% by 2050. Leclerc's tweet implies that if the publicly released data appears this alarming, the undisclosed aspects might be even more chaotic. We invite you to share your thoughts on Gareth Soloway's analysis and Bitcoin predictions, along with his insights into the broader U.S. economy. Kindly share your comments and observations in the comments section below. For more daily dose crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.